we're on the homeward stretch to potentially, if we fast forward from 2007 and we just look at the price action, this is where gold shot up another 30%. The stock market fell 55%. And as the stock market tumbled, the US dollar took off. And so I believe we could see something similar potentially down the road. Stock market sells off. Gold has its final blow off move to 4,100, 4,500 an ounce. Silver, I think, is going to hit 50 an ounce. The dollar is going to put in a bottom and start to rally as the stock market crashes. There's a lot of stuff coming to play. I probably just lost everybody, but there's a lot of really interesting things coming to play, which kind of just you need to be aware of.
Gold may be on the verge of a final explosive rally as markets brace for turbulence. Market strategist Chris Vermeulen explained that the current setup for gold resembles the environment seen after 2007, when the metal surged as equities collapsed by more than 50% and the US dollar spiked higher. He suggested that a similar outcome could play out again. If stocks begin to roll over, gold may enter a final explosive rally toward the $4,100 to $4,500 range, while silver could push to around $50 an ounce. He highlighted that gold is showing a strong technical foundation, backed by Fibonacci extensions. Using the November 2024 low, the subsequent rally, and the May pullback as reference points, he calculated potential upside targets between $4,100 and $4,800. Gold has also broken out of a large bull flag formation, signaling momentum to the upside. The first test may come at the $3,850 resistance level, a price that could be reached as early as this week or next. Vermeulen also emphasized that silver is setting up for an explosive move. On the daily chart, the metal is flashing bullish signals that could drive it to $45 within the coming week. Looking at the broader monthly view, he explained that silver tends to lag gold and miners before making sharp, accelerated moves to catch up. In this cycle, he believes silver could surge quickly toward $49 to $50, with the potential to test new all-time highs within the next month before pausing for consolidation. Before we dive deeper into the discussion on gold, silver, and the unfolding changes in the global monetary system, don't forget to like this video, subscribe to the channel, and hit the bell icon so you can stay updated with every new insight.
Yeah, well, there's a pretty clear chart pattern just using Fibonacci extension based on this low that we saw back in November 2024. We have the big rally up, we have the high, and then we have this pullback that we saw earlier this year in May. Using Fibonacci extension, we can get a gauge of where that momentum should carry the price of gold, which brings us to about 4,100, 4,800 or $80, somewhere in that range. And so gold is broken out of this big bull flag. It's starting to pick up speed, high momentum. So there's a lot of upside potential for gold here. And, just looking at the short-term chart, there's some really nice momentum here. If we were to look at this from a swing trader's perspective, this rally up, this quick little hiccup back down to the 5-day moving average shows that potentially in 3 or 4 or 5 days in the next week, we could see gold run another about almost 5%, just based on this high momentum move, which would be very nice. And it would actually balance out the size of this big bull flag that has been forming all year. So we got this giant bull flag, which is you have a rally up, it creates a flagpole, and then you have the flag flagging sideways in the wind, which is a pause before it continues higher. So overall, when this breakout that we're having, the first kind of real resistance area, I think, could be right up here around that 3850 area. And that could happen literally, as you and I are speaking, like this week type of thing, or next week. We're on the homeward stretch to potentially, if we fast forward from 2007 and we just look at the price action, this is where gold shot up another 30%. The stock market fell 55%. And as the stock market tumbled, the US dollar took off. And so I believe we could see something similar potentially down the road. Stock market sells off. Gold has its final blow off move to 4,100, 4,500 an ounce. Silver, I think, is going to hit 50 an ounce. The dollar is going to put in a bottom and start to rally as the stock market crashes. There's a lot of stuff coming to play. I probably just lost everybody, but there's a lot of really interesting things coming to play, which kind of just you need to be aware of? Yeah, I mean, it has a similar chart pattern on the daily chart. It's showing a pretty explosive move in the near term. Just looking at this most recent pattern, it's showing silver should run potentially in the next week or so to about 45 bucks an ounce. If we go and we look back at the monthly chart and look at the big picture of silver, silver has this tendency, which is what you just touched on, Kai, which is it can kind of be dormant. It can kind of lag for a little bit. Gold might take the lead, and maybe miners sometimes take the lead. And then suddenly silver will just like take off and play catch up at the last hour. I think that's likely what's going to happen here. I think silver all of a sudden is going to pop and take off. And I think we could actually see it hit $49, $50, maybe hit an all-time high in the next month or so before maybe we see a little bit of a pause and correction and the stock market has a reset. So gold and silver and the miners are all looking very strong. Not only are the charts on multiple time frames pointing to higher pricing, but as you mentioned, kind of the fundamentals, the economics, are also in favor. We have a really good tailwind, which is why I like gold here and why we've taken an added position in it. And really, if we take a look at this added layer of gold seasonality, Kai, you can see August, September through almost the middle of October, gold has a natural tailwind. It naturally wants to go higher on average every year. So a lot of things are lining up, telling us that gold should just whiz its way higher. It should be pretty effortless. And that's the joys of riding a trend. A trend should feel somewhat effortless. If you're trading and everything's going against you, it means you're fighting probably an underlying trend in the opposite direction. Right now, all the trends, including fundamental data, is favoring gold. Yeah, I mean, on a short-term basis, when we look at the 30-minute chart, we can see, silver miners got into an oversold condition and they have just screamed higher. We're long SILJ here with our short-term sector strategy. When you look at the monthly chart, silver miners are up here trading near close to all-time highs for this ETF, going back as far as it did. When we look at the GDX, which are the large cap gold stocks, it's very similar. It's trading right up near all-time highs, or actually at all-time highs pretty much, telling us that I think we've seen a good chunk, a majority of the move for miners temporarily. I do think they're going to go a little bit higher. But what's interesting is the juniors haven't really, like the gold juniors haven't really taken off. They've had a very nice run, but they're nowhere near the all-time highs. And I do feel like the juniors are eventually going to have a really good window. I do think they are going to have a bit of a pause and pull back along with everything else over the next, 6, 8, 12 months. If the stock market does stall out, I think we're going to see everything have a bit of a pause. And for gold, silver, and miners, it's going to create, a bull flag pattern, more or less. Wherever this tops out, we'll eventually see miners put in a bull flag, a launch pad, before it takes that next big run and shoots higher. And I think GDXJ and like the junior and micro cap gold stocks, when we get to that market environment, are going to be a really awesome play. But right now, money has been going into silver miners, into the large gold miners, and not quite as much into the juniors. But they're all pointing to higher pricing, and I think there's quite a bit of upside long term down the road. And I think near term, they're going to have an explosive move. Gold, silver miners should pop. But I do think after that pop in the next month, they're going to probably start to go sideways and build a big bull flag pattern for down the road for it to have another leg higher. Yeah, well, the one thing that makes me nervous when it comes to the miners, like when you look at those large caps, every time it's got up to this nosebleed level, it's going for a swan dive. When you look at GDX, it's a lot of large caps in there. It's at a level where it got sold into. Silver miners are the same. So I have a little bit of hesitancy. I like gold because it's a fresh breakout. It's got a clean move. It just had a huge multi-month pause. So it could keep moving higher, and miners might actually start to struggle because they've just had a hell of a good move. And we saw this in 2007. We saw out of gold, silver, and miners, the number one performer in this market environment was gold. It rallied and outperformed silver and gold miners, because the stock market might start to struggle. And if the stock market struggles, we see anything in it. Gold stocks are a stock. They're stuck in the stock market. And if the stock market tide is going down, it's going to naturally pull miners or mute their upward move. So I'm nervous. Newmont, everyone knows it. If somebody doesn't trade gold or know much about gold and all that stuff, they probably still have Newmont, or they know about it, or they own it, because it's just that crowded play. So I think the play right now is miners have been a great move. We'll milk it for as long as we can and see how far they go. But no, I think the end, a pause is coming soon, and there will be a point to realize it's going to need a breather before they go higher, which isn't a bad thing. But gold to me is the fresh play with the most opportunity.
Chris Vermeulen stressed that gold's breakout is more than just a technical move. It reflects growing stress within the global financial system and could act as a precursor to a broader monetary reset. He highlighted that gold, silver, and mining stocks are showing strength across multiple time frames, supported not only by clear chart patterns but also by strong economic fundamentals. Seasonal trends add another layer of tailwind, as gold has historically performed well from August through mid-October, reinforcing the potential for further gains. Vermeulen emphasized that the current alignment makes it an opportune moment to ride the momentum in precious metals rather than attempt to fight the trend, as these assets appear positioned to outperform in the face of market uncertainty. At the same time, Vermeulen noted that the dollar index is showing signs of a potential bottom, though expectations of Fed rate cuts continue to apply downward pressure. Investors are front-running the Fed by moving into bonds, driving prices higher while positioning for a weaker dollar. The overall setup bears a striking resemblance to previous market cycles. Equities remain stretched and concentrated in a few dominant stocks, gold and silver are steadily gaining strength, and the dollar remains one of the most out-of-favor assets. This combination, he suggested, creates a strong case for precious metals to continue trending higher, offering both a hedge and an opportunity for substantial upside as broader market conditions evolve. Let's get back to the interview.
Yeah, I mean, right now, the market is in limbo. I think the market is trying to figure out what the Fed is going to do. I think most people are too tied up in the news. They're too tied up on economic data and the Fed. And so that's why the market, I think, is choppy here. It's inconsistent, where we have there's a natural upward bias, but then we see big institutions, we see some heavy selling days where it looks like people are unloading portfolios, large chunks. It's really people in limbo. The market is still pointing to higher pricing. Like when we look at the daily chart on the right-hand side here, we're kind of having this rising kind of wedge, and it's kind of like a running correction. So instead of a bull flag that runs up and then flags in a controlled way and then has that second half of that move, a running correction or a wedge like this is a very volatile type of pattern, meaning when it comes to an end, it's going to be very sharp. And the big question right now is it going to have a sharp crack and fall and decline, or is it going to have a big pop and rally? And so that's kind of the phase we're in. And we need to expect there's going to be some big movements. Now, the market is pointing still to higher pricing. The trends are up on pretty much across the board. Even when we look at the short-term basis, this 30-minute chart on the left-hand side, these lime green areas is when the S&P 500 has dropped into oversold territories. They've also dropped to this pink moving average, which is the same as this 20-day moving average on the daily chart. So these two lows. And whenever the market's getting overbought based on these indicators, these tools, we see the market step back in and get bought right back up. So these waves of panic, these waves of fear quickly get bought up by some big institutions. So right now we're just kind of in limbo, but I would expect the market to break and rally to the upside, to break out to the upside going forward. But you're right. The market, when we look at the price of gold itself is warning us that the world is more or less preparing. It's telling us something bad is happening. And we're just waiting for that piece of news or that event, that kind of shoe to drop to cause be the name for the next financial reset, which I think is coming sooner than later. But you definitely don't want to fight this trend. And gold is telling us something bad is brewing. But you can't bet and try and pick a top, because this market climbs a wall of worry, and it can keep doing that for a lot longer than most people can stay solvent. Yeah, well, yeah, definitely. I think people were getting real nervous leading into the news, and then we hear it and we get that pop in the relief. When people are nervous, they usually sell stuff, or when they're uncertain. And then once the news hits the table and they're like, oh, okay, now I know the answer. People don't feel fearful anymore, and they get back in. So there's no doubt economic news and things like that sway the markets, but it's usually short-term dips and blips. It's usually not a trend reversal type of move. And when you look at this, the market is, it's looking primed and ready to push higher. And I'm pretty excited. I mean, we're long the markets here, and everything is still pointing to higher prices. I mean, we've got 3 high bars of green bars here, meaning there's some pretty good buying going on. I think the volume doesn't say a whole lot, although it is bullish. The higher volume green bars say those are days of accumulation, so people are building positions, and yeah, I get right now it's just wait and see. Just have to let the market mature. There's no need to pick a direction. I mean, you should be long, if anything, here, and just let it unfold, which it should resolve to the upside. If you look at the VIX, I mean, it's usually has this. You have a spike of fear, and then once that euphoric, that panic, dissipates, it just bleeds out. But look, if you just look at this chart pattern, and then I flip over to say the S&P 500. So this is the exact same time frame, and then I just flip the scale of the S&P 500. We just invert it. It's pretty much the same. I mean, right now there's not a lot of fear in the market. Believe it or not, the VIX is low. People aren't seeing volatility, and when the VIX is low, the market can just keep going higher and higher and higher. And that's really just kind of what we're letting unfold. A lot of people are trying to pick a top. A lot of people are betting on falling pricing. And this type of price action has got them thinking it's getting close, which it could be, but you definitely don't want to get in front of this because there really isn't a whole lot of fear yet. And this market is trending up. Yeah, the dollar index is trying to figure out if it's putting in a bottom here. It looks like a bottoming type of pattern, but it has not bottomed yet. More or less, it's kind of, I think a lot of people are thinking, there's going to be a rate cut, which could make the dollar lose some value. So that's kind of what we're starting to see. Is that I think that is the belief is there's going to be a rate cut. Usually the dollar is going to want to pull back. And if there's a rate cut, we're also probably going to see like bonds move higher. And if we take a look at bonds like TLT, you can see the last 4 days, bonds are just shooting higher. Everyone seems to be moving in, believing there's going to be a rate cut. And there could be. The question is it zero? Is it a quarter? Or is it half? We're just going to find out. But people are front running the news and trying to get positioned in for it. Of course, the news is going to hit. We'll probably see a pullback, but the dollar, people are betting on a rate cut, higher bond pricing, and they're expecting the dollar to fall, which will be interesting to see because, if we go back and we look at this chart, there's a comparison chart. The left one here, I'm going to go back to 2007 to the stock market high. We just go back here and I'll just zoom way in. So if we go back, the candlestick chart here, Kai, is the S&P 500 weekly chart. The S&P 500 was hitting new all-time highs just before it put in a major top and started to crash. Now, the yellow line is gold. And you can see we're in a very similar type of situation. We had a big pullback this year. We had a rally. We're pushing to new highs with stocks. 2007, we had a sharp pullback, and then we've had a rally. We're pushing to new highs. Well, gold for both of these time frames are like the top performers long term. They are picking up the slack. Gold is performing very well. And what's really interesting, if we go back to this time window on 2007 on the left chart there, we look at the Dixie, the dollar. It had sold off. It was one of the most hated currencies. Everybody says it's going to be worthless, blah, 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 all of that stuff. And then we come over here to where we are now on this other chart. We get this to load here, and we take a look at the dollar index. Dollar index is back down at the bottom. It's one of the most hated currencies. Everybody says it's going to zero. So we have a very similar setup. Erase all the news, the Fed, the economic environment, and just focus on price action. We have a very similar setup. Stocks are frothy. They're being dragged up by the Magnificent Seven, so it's not a healthy rally. Gold's outperforming everything else. The dollar's the most hated. And the markets really do move for the same reasons, no matter if it's a tech bubble, if it's a financial crisis like 2007 or whatever this new one's going to be here now. They sell off because people are scared and something bad is happening, or they rally because they're bullish and confident. So we have a very similar setup where we've seen before. We're seeing gold, silver, and miners come to life and outperform. This is what happens just before a major trend reversal. In fact, if we look at just the cycles in the market, usually precious metals do exceptionally well right near the top. We saw this in 2007 as well. And so this is an early warning sign. Capital, industrial, capital goods have been doing very well also.
The present market landscape shows a fragile mix of rising equities and suppressed volatility, yet the foundation beneath remains shaky. Gold and silver are asserting themselves as standout performers, often signaling deeper changes ahead, while bonds and the dollar mirror patterns seen before previous financial upheavals. With investors positioning for potential rate cuts, the resemblance to past market cycles is striking, suggesting that gold and silver may once again prove to be the assets best suited to preserve value when broader confidence begins to falter. Do you think gold and silver are signaling an early warning of a broader market reversal, like what unfolded in 2007? Stay tuned. If you're interested in real, data-backed insights on the financial system, hit like and subscribe so you never miss our weekly updates. Thank you for your support, and we hope you enjoy the video.